Welcome back to the channel. Today we're going to be talking to you about how to get a mortgage if you have bad credit. My name is Sean Rampersaud. I've been doing mortgages for about 15 years now, and I have tons and tons of customers that are calling me up saying, Sean, I don't think I can qualify for a mortgage. My credit score is whatever, 500. I have solutions for you. So stay tuned. Please like and subscribe to the channel if you like the content in the video. It helps me get this fantastic information out to anyone else that is in a similar circumstance. Here goes. So what is bad credit? Bad credit would be considered someone with a credit score of 0 all the way up to about 640. Anything under 640 is considered bad credit. That means something's happened in order for you to have a credit score that low. It could be you've never had credit. It could be that you miss payments. It could be that you miss many payments or have collections. It could be that you owe the government some money, or it could be something as simple as somebody doing fraud on your account. So we're going to figure out together how to fix these problems. And if you ever run into the situation where you have this situation where you need to fix your credit and you want to get a mortgage, please give me a call and I can help navigate you through the process. My information is in the comments below. So, can you get a mortgage if you have bad credit? The answer to that question is yes, absolutely. You can qualify for a mortgage if you have bad credit. There are lenders, including private lenders and B lenders, that will do mortgages for people that have bad credit. Some banks will make exceptions for you if you have bad credit and a large enough down payment or a good enough career. There's all sorts of different exceptions that can be made. So I'm going to explain some of those exceptions to you in this video. There are about 40 different things that I do when someone has bad credit in order to get them approved for a mortgage. I'm going to explain a few of those to just get started with the process. Number one, I would say dispute any credit issues that you have on your credit bureau with the credit bureau. So both credit bureaus, Equifax and TransUnion, have something built into their website where you can dispute something on your credit bureau. So for example, if you have a cell phone bill payment that you know that you didn't miss the payment on and it was just like a small discrepancy, or a credit card where you owed $1 on and they took you to collections for that dollar and the dollar was just from interest, that type of thing, you can dispute those issues, and a lot of times you can have those removed from your credit bureau within the first 30 days. Second thing is you absolutely should have 20% or more to put down on a mortgage. When you have 20% down to put on a mortgage, there is no reason a bank needs to get approved from a mortgage insurer like CMHC. So basically, you don't have to fit anyone else's guidelines. And if your bank will accept you, then you can qualify for that mortgage, no problem. The other thing is when you put 20% down on a mortgage, it opens you up to a whole new world of lenders. There are B lenders and private lenders that will only work with people that put 20% down on a mortgage. Do you need to have a job? No, you don't need to have a job to get approved with a private lender. You need to have 20% down, absolutely, but you don't need to have a job. It is, of course, better to have some form of income because you would qualify for a larger amount if you do have some income. You would qualify with a better lender and potentially get a better interest rate, but you don't need a job to get approved for a mortgage. One thing I do often is I remove a spouse if they have bad credit or a really high debt load. I remove them from an application. So I know usually husband and wife both want to be on an application, or both people that are buying the house want to be on the application, want to be on title, and that type of thing. But if you are detrimental to the application and it can't get approved because you're on it, then remove yourself from it and then just go to your municipality and add your name to title as the property owner. So you still own the property, but you're just not on the mortgage. You can get a cosigner. So a cosigner is somebody that comes on the mortgage that has good income or has good credit, that type of thing. That, in conjunction with yourselves, helps you to qualify for more. It will help you get approved for the mortgage. So getting a co-signer could definitely help. A lot of people like to get their parents on, or a brother and sister, to help them co-sign for a mortgage. Try a different lender, or try a different credit bureau. So if you try a different lender, let's say, for example, you go to TD Bank and they decline you. There are banks out there that have easier qualifications than others. So definitely give me a call so that I can help you find which bank is going to be easy for you to get approved in. Now, as far as credit bureaus, if Equifax doesn't have a good credit score for you, good enough to get approved for a mortgage, then we would try TransUnion as a different one. Now, most mortgage brokers and banks cannot use both credit bureaus. So you have to work with a broker that's got an approved with Equifax or approved with TransUnion. I'm approved with both. So if you want access to both, please give me a call anytime. You have to have a really good explanation for bad credit. So if your credit is bad, then you need to have a good explanation for it. So, for example, one explanation that's worked for me very recently is a lender asked, why did this person miss a credit card payment on this month and a car payment? Now, lucky for this person, both payments happened kind of in the same time frame, and it was because their spouse died, and they just weren't paying attention to their bill, and that's a pretty good explanation. So how you need to have an excuse or a reason or an alibi or whatever you would call it on why you have the bad credit. Like, what was happening in your life at that time and how is it different? Try to get more credit. So if you're one of those people that don't have a lot of credit or don't believe in credit, you definitely may need to have or get more credit in order to qualify for a mortgage. You have to be credit worthy and prove yourself to be credit worthy to get a mortgage. Now, that being said, if you just haven't had credit, then you may want to apply for more credit to get yourself ready to qualify for a mortgage. And finally, work with a mortgage broker that knows. Okay. When I say that knows, somebody that's been in the business for a long time, there's tons of mortgage brokers out there, and there's tons that don't know what they're doing. There's tons of bankers out there, and there's tons that don't know what they're doing. So work with somebody that knows, somebody that's been in business for a long time, somebody that has done thousands of mortgages like myself. If you do want to work with me, please reach out in the comments below and I will give you a call to set up your mortgage appointment. What is the lowest credit score a bank will consider? So that's an interesting question. So basically, most banks will consider credit as low as 600. Okay, and most banks prefer people with credit over 680. So 680 or above is good credit. 650 to 680 is okay, and 600 to 650 is considered bad credit. Anything below 600 is considered really bad credit. But a bank, like a standard bank, will only go as low as 600. And if you are at that 600 range, you have to have a good reason why you are at that 600 range. So keep that in mind when you're applying at banks. And now, if you know your credit score is below 600, you need to call me because I can still get you approved if you have 20% down. And I can get you approved with a B lender or a private lender. And I'm going to get into that a little bit further in this video. If you like the information so far, please like and subscribe to the channel. It helps me get this information out to all the people that actually need it. YouTube's algorithm is really shifty, and they want the likes. They want to see that people like this video in order for me to get the information out. Now let's continue. What credit bureaus do the banks consider? So most banks are working with the Equifax Credit Bureau. That's kind of like the standard credit bureaus the banks like to use. However, they will consider TransUnion. Some of them will consider TransUnion. I should rephrase that. Some banks will consider your TransUnion credit bureau. So a lot of people will go on websites like Credit Karma and that type of thing. And that those websites are kind of like an average of the two credit bureaus, and they're not always entirely accurate. Sometimes people's Equifax will be way higher. Sometimes their TransUnion will be way higher. So what I do to mitigate that is I try to pull both credit bureaus if I have to, and pick which one is the best to send to the lender. So what type of banks will do a mortgage with somebody that has bad credit? So if you have bad credit, the standard banks generally don't like people with bad credit. Like I said, they'll go as low as 600 with a really good reason. There are companies out there, they're called B lenders or B divisions of banks. So some banks have B divisions. There's also separate financial institutions with B divisions. With the B lenders, it's a little bit more lenient. You have to have a minimum of 20% down on single family homes and 25% down on condos in order to qualify with a B lender. But the B lenders make it much easier to qualify. Now, if your score is really bad, like I'm talking really, really bad, then there's also another option for you. Again, 20% down is the minimum down payment. These are called private lenders. And private lenders are companies or individuals that are investing in the mortgage. So usually the way the structure works is there's a company, okay, we'll call it Joe's Financial, and then there is Christine, an investor. Okay. Christine's got $100,000. She wants to make money off of it. She gives it to Joe, the company. Company wants to make money. Christine wants to make money. And there are charges and fees in order for both people to make money. The interest rates are highest with these companies, but they are the easiest to get approved through. How much do B lenders cost? So a B lender will charge a fee anywhere between 1% and 3% of the purchase price. Now, a private lender is even higher than that. Private lenders' interest rates are usually significantly higher, but also their fees are higher. So their fees are normally 3 to 5% of the purchase price. It can even go higher than that if you're dealing with a greedy individual. So what are the interest rates like with B lenders? So the interest rates with a B lender are usually 1% or so higher than a regular bank. So that you got your 1% higher. So right now, like the bank rates are at 4%. A B lender rate would be about 5%. On top of that, you're going to have to pay a fee to the B lender of 1 to 3% of the financed amount. So a private lender, on the other hand, is going to be significantly more expensive. They're about 4%, well, as low as 4% higher than the bank standard rate. So if the bank rate's 4%, you'd be at about 8% with a private lender. And then you've got fees of 3 to 5%. So the private lenders are the most expensive, but the easiest. B lenders are less expensive, but not as easy to get approved through. Either way, with 20% down, I can most likely get you approved for a mortgage. How much do I need to put down if I need a uh, high risk mortgage? So if you need a high risk mortgage, or if you have bad credit and you need a mortgage, then you're going to need to put down a minimum of 20% in major municipalities on single family homes, 25% on condos in major municipalities. If you're in a suburb, um, not a major suburb, like a small town or something like that, you might have to put 25 to 30% down to get approved for a mortgage. And there's going to be appraisal fees involved in it, and I'll get into a little bit more of that in another video. How can I lower my payments if I am getting a high risk loan? So if you're getting a mortgage through a B lender or a private lender, you may want to figure out how to lower your payments. Your payments are going to be higher than what it would be with a regular bank. So there's a couple of ways to do that. One way is to ask for an interest only payment. That means that you're not paying any of the principal amount down of the loan. You're just paying the interest. Okay. Some private lenders will allow me to refinance your house and build all of the interest in for the entire 2 year or 3 year term of the loan so that you don't have to make any payments for the next 2 years. So, is there a way to make no payments? Yes, there's a way to make no payments as we build that all into the mortgage expense, all of your payments for the next few years. This does a few things. The bank gets their money up front and you get your mortgage in place so that you could start repairing your credit so that you can flip over to a regular lender. That's always my intention, is to help you get approved with a regular bank so that you get the best interest rate in the future. But just do this short term to get you in the position and to get you into the property and to own a property, and then to transfer you over to a regular bank in the future. The second way of lowering your payments is to extend the amortization. So, amortization is like the length of time it's going to take to pay off the mortgage. So, we would extend your amortization to 40 years or 45 years if the private lender or B lender allows it. And that will help lower your mortgage payment amount. Is it safe to finance through a private lender? Or is it safe to finance through a B lender? The B lenders, yeah, it's definitely safe. These are bigger companies, these are big institutions, and it is very safe to finance through a B lender. Private lenders, on the other hand, it's not always safe. So you definitely want to talk to me if you're thinking about doing a private mortgage through someone. You're going to want to look at things and do research. Do look at things like reviews. You're going to want to talk to people about it. You're going to want to look at their website. You don't want to take it from an individual. You're going to want to read all the terms and conditions before you get a private mortgage. So, yes and no is the answer to that. It can be safe. Do your due diligence first, or talk to a broker that's dealt with the company that you're going to get the private mortgage from. The B lenders, absolutely very safe to do. A lot of high level investors deal with the B lenders because they're maxed out at other places and they have to go to the B market to get approved. Thing I really want to warn you about is that most mortgage brokers don't understand the private market and the B market. So if you're going to go and get one of these types of mortgages, you need to call me or another broker that has been working with these companies. I specialize in this area and I want to be able to get you the best interest rate and terms and conditions as possible on your loan. So definitely call us if you have any questions about B lending or private lending. Again, my name is Sean Rampersaud. Thank you for your time. Please like and subscribe to the channel and call me if you have any questions. Thanks.